Toot Shani. Welcome to Jewish Money Matters. How are you? Thank you for being here.
I'm good. Thank you so much, Yael, for having us.
I'm very, very excited to get to talk to you today. I know for a while, we've been trying to talk. You are the founder and managing partner of Sarona Ventures, an Israeli venture capital firm with an impressive track record in the tech space. You manage a portfolio of about 100 companies, billions of dollars in portfolio value. And you guys have an incredible new initiative since October 7th, Tech Shield, that we want to dive into today. But before we get into that, I think it would be really beneficial for the audience, and I'm sure there's a long version and a shorter version to this, but to get a little bit of a feeling of Toot as a founder, as a managing partner, what came first, Toot? The love of entrepreneurship or the love of and business, or the love of tech?
For me, that's an easy one because I grew up in a non-techie family.
Oh,
so for me, the love of business was absolutely, prior to the love of tech.
really? They were
But
entrepreneurs? Your family was entrepreneurial?
on a smaller scale.
Uh-huh.
But they were very entrepreneurial as professionals.
Uh-huh.
And so I grew up in a very creative environment. So for me, being independent and taking decision to go out there and, fulfill my own dreams and build my own initiatives and create my own job, all of that was something of a routine in our house. It was never about, okay, you need to make a living, you need to go find a job. It was
Right.
about, you need to make a living, you need to create your own job.
Nice.
So for me, that was, that's you started from the easy ones, I would say.
Yeah. No, but it's always interesting to me. So you have this understanding that if I want to create, if I want to bring money to the table, I have to create my own thing. I don't depend on anybody else. I generate value and I get money in exchange, which is a great thing to learn early on in life. At what point does it veer into tech? Did you start your own companies? Like, at what point what happens? Give us a little bit of connect the dots for us a little bit.
Okay. So yes, I started my own company. In Israel, there is a mandatory military service. So I was pretty fortunate to have a technological program prior to the military. So I studied electronics engineering.
Oh, wow.
Prior to serving in the military.
Oh.
And that was, I would say that I was always like tech savvy, but I was never into tech.
Uh-huh.
And that was my first introduction with, the world of how does technology actually work.
Mm-hmm.
And it was very interesting. And when
what's
I
that
finished,
company that you started? What is it? What was a
so
company?
that was after the military service.
Uh-huh.
It was a non-tech company, an entertainment business. That was my first company. It was non-tech at all, but it was
Uh-huh.
very successful. And I sold that after a few years.
So you sell that company and then you come up with the idea of building a venture capital firm?
So I'm older than I look. So I had this company, then I had a short period of time in an enterprise
Uh-huh.
where I worked for a large German conglomerate.
Oh, so you went to corporate.
I went to corporate
That's a
as a
big
decision.
change.
It was a big change, but it was a decision and
Mm-hmm.
it served the purpose. It was
Uh-huh.
very interesting. I learned so much during that year there. And then I built a second company.
Oh, this is before Sarona.
Before Sarona. And then Sarona, we started in 2017.
Uh-huh. Uh-huh. What was the second company? Entertainment also?
No, it was an economic consulting firm.
Uh-huh, uh-huh, uh-huh. Okay. And so what sparked the idea that you wanted to to found this fund, Sarona? What sparked the idea?
When I was running my firm, mainly I was running in international initiatives. So
Uh-huh.
working with, multilateral organizations like the World Bank Group and European Commission and governments. We had an initiative, a project with the Guatemala government, or some countries in Europe. We had initiatives with large multinational corporations, and prior to that company, I was pretty involved in the Israeli tech scene. I would say startup scene more than tech scene. We built together with a few more friends a community for startups, for entrepreneurs. The founders used to meet once a week and exchange ideas, exchange problems, share with each other, support one another. So I was pretty active in the communal aspect of the Israeli tech ecosystem. In 2012, I organized a pretty big, I would say, hackathon in Tel Aviv. It was hosted at the Google campus. Back when it was just launched in 2012. I think we were like the 10th event that they held in their space. And when I built my consulting firm, it was primarily working outside of the country, mainly with large CEOs or big financial organizations. And around 2000, I would say 16, 17, I started to read more what's happening in Israel. And it really struck me that the difference between the Israeli entrepreneurs back then, and the international entrepreneurs was fundamentally different in a way that so an international entrepreneur usually would be someone that is business oriented, that wakes up in the morning and asks themselves, what can I sell to whom? Where can I find a business opportunity and make money, make margins, make a business? Whereas in Israel, it used to be way more innovation oriented or product oriented or tech oriented. It was not about an entrepreneur waking up in the morning and asking, okay, how am I going to do business today? But rather a creator, a techie or a product person that would wake up in the morning and say, what am I going to create, to innovate, to build that will be so disruptive, so different that no one else had ever done that before, which created an ecosystem that is very, very different than regular, business environments and business entrepreneurs just getting up in the morning and saying, okay, I'm going to build a consulting firm. I'm going to build a real estate firm. I'm going to build any other type of just regular line of business. But the other side of it was that most of the businesses that were, formed in Israel from a tech perspective and became big were exits.
Right.
Were founders that were building technology and that they just build, very, very deep technology with good product and maybe few customers, but then selling it away. And when I started to, work a lot more in the international environments and looking back at what's happening in Israel, I really felt like there is a huge missed opportunity in the Israeli ecosystem. And obviously, the ecosystem in Israel is very close to my heart. I am from there, and we have, us Israelis, Jewish people, even around the world, we have a very, very strong connection, whether we'd like it or not. And I think this is something also that very differentiates us and sets us apart than almost any other place in the world, where we really care. Like when we think about Israel, we think it's a global national effort, and it's something we all need to do together. We all have built it together. We've made it successful together, and we need to take care of it together. And it creates a really unique, set of mind.
There's a sense of ownership.
Yes, and a global sense of ownership. Even if you haven't lived there for 5 years, I was out of the country, but still for me, it was something very, very dear to me. And when I saw this gap that I was working with business entrepreneurs all over the world, on a very large scale. And on the other side, I saw that in Israel, the Israeli entrepreneurs are building technology and selling it for $50 million, for $20 million, for like 150 million would be, wow, that was a very big, acquisition. And the mentality was not, let's build a Google. It was, let's build to sell to Google. And I felt like it needs to be changed. And I decided to come back to Israel in 2017 and to build an initiative that will help the Israeli entrepreneurs to change their mindset from exit to build up. And
amazing. Amazing. No, I really like this story. And now I can understand that how that makes sense. So you're basically saying, let's go in and help these companies not just be ready for exit, but help them, give them human capital, financial capital, all the things that they need to become these incredible global companies. And yeah, there might be an exit around the corner at some point, but let's take them to the max, basically.
I think it connects to the sentence you said in the beginning of this conversation. It's about value creation. And when you're building a company with a thinking in mind that you're building a technology or a product, usually you would find someone that would buy this,
a buyer, right,
as like an acquisition,
right.
When you're thinking of value generation and you're thinking, okay, that's my customer, this is my beneficiary, this is my stakeholder. How do I continuously, repeatedly, ongoingly creating, increasing value to this stakeholder? And I think that differentiates companies that are building a feature-like company that ends up being sold, which is a good number of the companies in Israel, right? I mean, used to be, and still some are, with companies that actually manage to evolve throughout their lifetime. And if Amazon would stay a bookstore, they would not be the Amazon we know today.
Exactly.
If Google would stay a search engine, they would not be the Google we know today. So building a legendary company is a question of how do you evolve, and your evolution has to come from a deep core question of who is my stakeholder and how do I continuously, every single day, how do I create better value to this stakeholder? And I thought, I mean, I still do, but back then it was much more evident that the Israeli entrepreneur was lacking some level of, today I would define it as confidence. The Israeli entrepreneurs was lacking confidence to step up and build a larger company than a product that would be sold and then another product that would be sold, because you saw a lot of serial entrepreneurs. They were building a deep tech company and then selling it, and then building another deep tech company and then selling it, and then another one and then selling it. And today you actually see entrepreneurs that even if they haven't had this serial prior experience, which obviously, it's easier to build $1 billion company after you build a $500 million company. But even if you have entrepreneurs that haven't done that in the past, they have the courage and the supporting infrastructure in terms of the right venture funds, the right advisors, the right talent already in Israel, which was not necessarily the case a few years back, to actually take this challenge and build companies that would be, revolutionary and evolutionary in order to become huge success stories. And you see that in Israel today.
Yeah, so it's a bit of a culture change, what you're proposing. It's an ambitious plan to change the entrepreneurial culture from within. And I could see how it's very attractive to the entrepreneurs in the sense that it's not, I'm going to give you capital so that you could stay product centered, but I'm going to give you capital, talent, advisory, et cetera, et cetera, et cetera, so that you can grow and shift to become that your focus is value generation from within. So I can see how that could be very interesting. Now, to clarify for the audience, you're a founding managing partner, which means that you brought in your own capital into this fund along with partners. Was this always was this always the plan? Were you sitting on capital and saying, one day I'm going to either go again and create my own company or invest in companies? Like, tell me how that transition worked, because again, not everybody's sitting on capital and saying, okay, you know what, I'm going to go revolutionize the the Israeli entrepreneurial scene, and yet you took capital along, I presume, with others, and you started this.
So I think I would say here's something that I think would be beneficial to also the entrepreneurs in the room, not only the investors in the room. The most important thing when you're starting a journey, and any entrepreneurial journey, is not necessarily the capital. It's the drive and the vision and the ability to bring in other people to your journey. Because the bigger your mission, the more people you're going to need to help you to promote your mission and to push it forward. So I think, I'm not an investor in nature. I'm an entrepreneur in nature. And my partners are as well. So I was very, fortunate. I think there is some background noise. Is it okay?
Yeah, I hear you.
Okay. So I was very fortunate to meet the right partners. I think, in many junctions in life, I could tell you, both from my own experience as well as entrepreneurs that I've been, backing along the years, people is everything. And I would say that again and again and again and again.
Yeah.
And I was very fortunate to meet the right partners to build this initiative with, which also contributed capital, but that was not the main component. The main component was experience, was vision, was passion, and was longitude.
Right.
And that was what allowed us together to build Sarona. So in 2017, I teamed up with the Boise single family office, which is very notable entrepreneur who moved to Israel, very Zionist, Jewish, French, moved to Israel and basically started investing as a family office in Israeli companies with exactly the same mindset that I've had. And sometimes, sometimes it just works that the world puts it together with the right people that you actually
100%.
need to meet.
100%.
And this is what happened in our case. And so we teamed up and we bring together a very, very complementary set of skill set. Philip has built a company prior, took it public, made about 50 M&A operations with his own, hands. Taking the company public, 17 subsidiaries around the world, 2,000 employees, and myself with my experience with working with ecosystems around the world and having over 15 years of startup experience, working with young entrepreneurs and helping them to pass forward along with multinational CEOs. And what really puts us together is the vision to help the Israeli, ecosystem and the Israeli entrepreneurs to take the country to the next level, take the economy to the next level. And I think, if you would allow me, I think that's a very smooth transition to also why we actually decided to launch TechShield at this very moment. And I think this gives a really nice background to understand our motivation and our connection to the country and why being a fund, maybe we can give a few words about Sarona as well, on the side, just so the audience knows. But being a fund, you're not obligated to do anything, right? Besides choosing the right companies and investing in them.
Good point. Right.
So taking a decision to kind of launch something that is somewhat different than what you're usually doing, we don't have to do that. I mean, we could just continue, day to day, continue with our fund, finding good companies, investing in them. We're not obligated to do anything different, but we did.
But you did. And I want you to tell us specifically what TechShield is. But first, I want to dive a little bit deeper into that point, because that's something that I intuitively noticed as I was reading about Sarona and TechShield. The first thing that came to my mind is, wow, what a group of people. October 7th happens, and a few days later, we all have to go back to work. What happens? Give us a little bit of the spirit and the conversation within the team, within that space, that made, what was going on in your minds in those conversations that made it so clear for you to, as a CEO, as a leader, to say, we're focusing on this right now, even though it, like you very well said, you didn't have to. So give us a little bit of the feel of what were those conversations that really was that impetus for it.
Yeah. So I'll be completely, candid with you. I was actually shocked in the first few days, week, after October 7th. And we were not, at that first week,
we were productive.
We were not. I mean, we were trying to be helpful, right? But we were in complete shock on all fronts. So we did things to help, the soldiers. So we donated some money, and we bought food for the soldiers, and tried to help to the families that were evacuated. But I think all in all, both me and the team, right? I mean, I don't think it's not an easy thing to wake up after something like this, and tell your team, okay, we're going back to work. Even to tell yourself, okay, we're going back to work. And so it took us a few days to get back on orientation. But then the internal conversation was before anyone even spoke about the economy. Everyone was still discussing two main topics. They were, one, how do we help the soldiers in the front line, including the evacuees and the families, and how do we combat the social media battle. These were the two main topics that were primarily dominant. And for us, it was very clear from already the fourth day, fifth day, and throughout the first week, that Israel is not only a security country. It's not a military country. Israel is a startup nation, and that's the primary reason why Israel has been able to create so many interlateral alliances with countries around the world throughout the years. It is not because we have nice eyes. It is not because we have natural resources, because we did not until this recent gas. It's because Israel has a very strong defense technology, innovation, and entrepreneurship, which creates a pretty solid and stable economy. I mean, you must admit, if you're looking at the Israeli economy throughout the years, even now, even during the wartime, yes, you had a peak of the stock market, but then it peaked right back. Yes, you had a peak of the Israeli shekel versus the dollar, but then it balanced right back. the Israeli economy is very stable, has been and is, and I believe will be. And that is the main thing that allows us as a country to create partnerships with international countries around the world.
Right.
And you know, if you add on top of that the fact that for Jewish people around the world, and you see it now, when Israel is weak, it's terrible to be a you know, Jewish community in other places around the world, because that's how it is. And I don't think we need to fight to change it. We just need to fight to keep Israel strong. And that's what we're doing. But given that so many people, and I might say, you know, smart people, are engaged mentally, emotionally, economically in making sure that this country is and will be very, very economically stable and strong, it will be, and it is. And when we were discussing internally, we were saying, hey, I mean, the front line and the social media is not the only battle that we're fighting. And to be honest, the most important battle, in our opinion, and also where we are the stronger, when we are asking ourselves, okay, I mean, we are buying foods to the soldiers, is that really the best way for us to help?
We go back to that
network.
We go back to that. Where do we add value, right?
Yes, exactly. And where do we move the needle too?
Right.
With all our network, and we have, I think we're one of the most international VCs with an office in Israel. And our ability to move the needle for the Israeli startup and tech ecosystem, and by that the economy is really vast,
right?
You know, with the network that we have, the people that we know, the capital that we can access,
right?
And our responsibility, I think not only ours, I think the entire tech sector in Israel, but you know, I speak about ourselves. We are an economic player. We are not a non-for-profit.
Right.
There are a lot of non-for-profits. We give them money.
Doing great work, right?
Doing amazing work. But that's not where we're strong. And in our internal conversation, our operating partner in Israel, he said something that you know really resonated with all of us. He said, you know, what I see now in the economy, and that was like the sixth day.
Right.
Of after October 7th. He said everyone is doing what they're best at. Restaurants are making food, toy stores donating toys. What we do best, we invest in startup companies, help entrepreneurs, and allow them to build phenomenal companies, grand companies that would fuel the economy. That's what we do best.
Right.
And that's what we need to focus on. And then came all the, you know, questions. So now we know that we need to revert back to our core, and that's where we need to contribute to the global effort. But what's the best way to do that?
Right. And so what is the best way to do that? It's obviously Tech Shield. So tell us exactly what Tech Shield is attempting to do.
So Tech Shield is a reverse fund initiative. And by reverse fund, we mean that we built a structure, we built a mechanism, a framework that will allow investors that justly, they have some concerns on fueling their money now into Israeli companies or Israeli funds or Israel in general, because mainly investors that are around the world now, Jewish people around the world, they are very connected to the Israeli economy and the country as a whole, and have a strong desire to support. Right. But when you speak about investors, and we know, I mean, we are also a single family office. Before we turned into a fund, we invested our own money alone. So we're also a family office. And we know that charity pockets and money pockets are not the same pockets.
Mm-hmm.
And you don't do one with the other and vice versa. So if you want to help the country, you're going to donate. But what we do and what we think is important is to fuel capital into Israeli companies in order for them to grow and for them to keep building the Israeli economy to continue being strong and stable as it was up to now. Because we all agree that that's what we need in order to make sure we're all, living happily ever after and having
Amen.
quiet, peaceful life.
Amen.
So what we launched is a mechanism that takes away the ambiguity and the concerns by providing the transparency in advance. So instead of creating a regular VC fund, where an investor just puts their money in a fund and hopes that it would be directed to the right companies, we understand that now coming and saying to an investor, invest your money, and I'm not sure which companies I'm going to invest in, may create some, unease. Yes.
Right.
And so we created the reverse fund model, where we first pick the companies and only then we raise the capital. So we group them together into one fund, but the investor knows exactly from day one to where their money is going. And we launched it, and we're now in the first reverse fund that we're launching. And I must tell you that the feedback is phenomenal.
I want to hear about what kinds of companies you chose for that first reverse fund. What are the specs? What's the profile of companies? What were you looking for?
It is critical for us. I mean, we've invested in over 100 companies in the past. We have $7 billion companies in our portfolio, including the biggest one, which is now $12 billion. So we know what we're doing. We know how to choose companies. And I mean, sometimes obviously it doesn't work, but our track record is very impressive. But we still don't come to the investors and tell them, give us your money.
Right.
We bring the companies in advance. And we decided to focus specifically on companies that are already VC backed. They have sufficient runway. So they have sufficient capital already in their bank account, meaning these are not companies on distress. These are not companies that are going to close tomorrow morning. These are companies that we actually believe that are going to be big, successful, create jobs in Israel, make good revenues, and also have a good exit event or IPO.
So one could argue why focus on the ones who have financial runway, who have already the backing, instead of focusing on the ones who, given the war, are at the brink of running out of financial runway.
We believe that, again, when an investor puts his money, he makes a choice. Do I make a donation or do I make an investment?
Right.
And as we said, our job in the Israeli ecosystem is not charitable. Our job in the Israeli ecosystem as also the global investors who are, have been and are investing in the Israeli tech ecosystem over the past, decades. So our job is not to save the bad companies. Our job is to strengthen the good companies. And these companies are today, not all of them, but some of them are today in a situation that in October 7, we know what happened. On October 8th, they received an email from investors that have signed term sheets with them and told them, hey, I mean, we like you and all, but let's wait until end of Q1 to see what's happening. And these are excellent companies. I mean, the companies we chose for the first reverse fund are companies that are all VC backed. They have revenues. They're growing 10% to 26% month on month.
Mm-hmm.
They have customers that, you know, the biggest companies,
Right.
the biggest logos, you know, in today's, you know, global tech world are their customers.
Right.
But the situation is that Israel has went through a shakeup.
Mm-hmm.
And this shakeup created a situation that less international capital is now going to Israel.
Mm-hmm.
Because if you were, you know, an unrelated investor prior to October 7, all you had in your head was Israel has the best technology in the world.
Mm-hmm.
After October 7, what you had in your head is, oh my God, my LPs are going to, you know, burn me alive if I'm going to tell them that I geared money into a war zone.
Mm-hmm.
We know that it's not a war zone like it is being, you know, depicted. But people who don't understand, that's what they foresee.
Right. And so you now, I saw that you closed applications. You're not taking applications anymore, are you?
We are focusing now on, so we received over 300 companies.
Okay.
And we chose 7.
Wow. Okay.
And with this 7, we're going to raise the first reverse fund.
Okay. How much are you looking to raise?
We're raising between $7.5 to $9 million.
Uh-huh.
And ideally, we're going to complete this fund end of February.
Mm-hmm.
And then potentially can open another one.
Mm-hmm. Mm-hmm. And so does that mean that, let's say, each of these 7 companies does it work equitably? Like in the sense of how much of those, let's say you raised $8 million, do they each get a portion or how does it work?
So we actually made a full due diligence process
Mm-hmm.
before we chose the companies.
Mm-hmm.
And then we chose the 7 companies.
Mm-hmm.
So during this due diligence process, we also negotiated the valuation for them.
Right.
We also agreed on how much money we're going to invest. So the package is, you know, it's done, it's sealed.
Mm-hmm.
And we're going to deploy between $600K to $2 million per company.
Okay.
In this fund.
Mm-hmm.
And the companies we have there are, you know, extraordinary. And I think it's important also to know that the companies that we've chosen are not companies, again, they're not companies that are out there and they say, I cannot function anymore, I'm going to close, I need rescue. It's the contrary. These are companies that are, you know, they're growing phenomenally, but they are in a situation that term sheets were withdrawn, or their existing investors are foreign and they cannot fuel more capital.
Mm-hmm.
It's circumstantial,
Mm-hmm. Mm-hmm.
which also creates, I think, you know, for investors that are going to join us in this journey, I believe this is a clear, classic double bottom line.
What do you mean by that?
I mean that when an investor invests in this reverse fund, it's not like they're saying it's charity, but it's not like they're saying that's like regular business, I'm going to just invest in companies.
Mm-hmm.
Because they're investing in companies that are fast growing. They
Mm-hmm.
are definitely going to create substantial returns.
Mm-hmm.
But this is a situation where these companies, if they don't have the amount of capital they need now, they're going to grow less, and they are in a situation that they would contribute less to the economy. So
Mm-hmm.
when an investor decides now to invest, whether they choose to invest because it creates an impact on the economy or because it's an opportunity because these companies were not available otherwise, both are fine.
Mm-hmm.
And either or both are fine.
Right, right. I had a follow-up question to this, which was, yes, about the skepticism. We're talking about how it's interesting for the investor, right? And I could see how it's interesting for the investor, especially the investor who is motivated to really help, like you first introduced, to really help the economy, who's really has that sense of ownership and believes and understands, right? And they're coming to you and they're seeing these companies are vetted. They're vetted by a group who knows how to vet companies, right? So I know really the impact of my dollar. So that's all very, very good. From the perspective, and this is probably not just particular to TechShield, this might be just a general thing, but from the perspective of the company, there tends to be, this, a bit of a skepticism in terms of, number one, how much is the VC fund or my investors, how much are they going to be involved in the day-to-day minutia management of the company? And number two, how much equity do I give, right? There's always that tension when we take outside capital. Would you help us kind of clear that skepticism? Because you well know that there's ways to navigate this and that people shouldn't be scared.
Are you speaking from the company perspective or
Right.
from the company perspective?
Right.
How much equity should they give to an investor?
Right. Usually the feeling when I'm going to take capital is, how much equity am I willing to give up? Right. And also, how much do I want these people to be in my space telling me exactly what to do? Right. And I'm sure you've encountered that obviously in your work. But I'm sure there's some light that you can bring from your experience to help calm that notion, let's say.
Mm-hmm. So I think, it's kind of a different, I think, perspective and topic versus how investors look at the investment realm.
Right.
For an entrepreneur, there is a thumb rule of how much equity you're going to give in every single investment round that you're doing. But then there is also reality. So
Right.
in the thumb rule, usually you don't want to give more than 20, 25, 30% in every single equity round that you're raising. That's the thumb rule. So every round you want to, multiply your valuation approximately 3-4 times, then you want to give 20 to 30% of your equity to an equity investor. That's the thumb rule. Now, a question of how much equity you give is a derivative of what's the valuation of your company, right? Because at the end of the day, you have your valuation, how much money you're raising, and that computes the equity. So I think if my advice for entrepreneurs and for startup founders is always take more advice. I mean, always research the best practices in the market before you agree with, especially employees, or if you're giving an option portion, an ESOP plan, or an equity stake to an employee. Look through and try to benchmark what's the most standard. And when you're speaking with investors, try to evaluate. So you can take an equity deal that gives more shares if the investor is more valuable to you.
Right.
And that's okay, because the startup game is a long-term game. It's not a game where you say, okay, I want to capitalize on my buck.
Right.
On a short-term gain. It's a long-term game. And in the long-term game, it makes much more of a difference. Choosing the right partners, going back to,
That's the
people
key
in
word,
our
right? The
conversation.
partnership, right? That's the key word, partnership.
And your investor is your partner.
Right.
So trying to find the investors that would be valuable to the right extent, and let you work the right extent.
Yes, yes.
My different investors, different investment strategies, different philosophies. But my philosophy is that it's better to invest on the right team and let them do their job. Help them when you need, when they need, connect them when it's valuable, but mainly invest on the right people, on the right team that knows how to execute the vision that they're after.
And that's a testament to why you guys at Sarona have been so successful right there. So going back to these 7 companies, were these companies already financially backed by Sarona, or they were new to you?
Sarona participates in the investments. Yes.
Okay. So Sarona is going to participate in the race. It doesn't mean that they've invested in these companies before.
True.
And so what is the timing? You talked about raising up to maybe $9 million. What is the timing now that you think you're going to close the race, you're going to be able to raise the money?
We're going to close this first reverse fund by end of February.
Oh, wow.
Yes, it's a rapid raise.
Very nice. Very, very, very cool. So if someone wants to learn more about investing in TechShield and or applying, submitting an application for their business, where should they go, Toot?
So they can just visit techshield.sarona.vc. And everything is there. All the information is there. And they can reach out to our investor relations team or apply as a startup company. And, for me, just one last, sentence on that. For me, the most important is to see that investors' confidence is back. And I want to see investors having the confidence to invest in to back Israeli companies. And that's the overall, global purpose of this initiative. And I hope to see more, whether through us or other initiatives, to see foreign capital continues to come in Israel, and investors' confidence back, understanding that it's do good and make profits, both.
And I guess that brings us to how receptive was the market to this idea? I mean, evidently you've done this pretty quickly, so I guess the answer is quite receptive. But maybe walk us through that. How hard was it to sell the value proposition, or maybe how easy was it to sell the value proposition to investors to participate?
We kind of built it on the feedback of investors. Instead of going and launching a regular fund that would come and say, we're raising a fund to invest in, Israeli companies that have been impacted by the war, we went and spoke with our network, mainly not only, but a lot of Jewish investors and international investors, that some of them have been investing in Israel in the past. Some of them have not invested in Israeli companies in the past. And really the common denominator with all of them was, listen, our heart is broken. We hear you. We really want to help. We've been donating.
Right.
We've been supporting the, awareness effort on the social media fronts. We really want to help, but it's a bit concerning. I mean, we're not sure. We just want to, we have a single companies that we invested here and there. But we're not on the ground.
Right.
We don't really know what's happening. And when we see companies and some of their people are on reserve duty, and they have maybe customers that have been putting their contracts and negotiations on hold, and do you have investors who withdrew term sheet? How do you differentiate between the good companies that are circumstantially in a situation they can use more capital, and the companies that have been impacted and are not going to wake up from this? How do you differentiate them if you're not on the ground?
Right. And that's where you guys come in.
That's where we come in. And when we understood this, we really cracked it with the reversed fund model. That was it really creates, it allows the investors, to ease down their concerns.
Right.
Because you know exactly where your dollar is going. You know who are the companies, how are they performing, who are the other investors that are backing them, what's their market, who are their customers, and that these are not companies that are going to be closed tomorrow.
Right.
Worst case, they're going to be sold for a lower multiple than what we anticipate.
Okay.
But these are not companies that will die. And if we actually see them continuing to grow and succeeding beyond our expectations, every single dollar that we're putting is a dollar that goes into the Israeli economy. It's a dollar that goes into, recruiting more people in Israel. And I don't know if you know, but that's a fun fact. Every high-tech salary paid in Israel creates 3 additional jobs.
Wow.
From spend.
Wow.
So there is nothing stronger that an international Jewish investor can do at this time to strengthen Israel's economy than to fuel capital into Israeli companies.
Right. Beautifully said. I love that. And the reality is that the fact that it's you guys doing it, I mean, it also, we have to admit the fact that you have such a track record, it adds the comfort level. I mean, this is not just a reverse fund that's coming from, nowhere. It's coming from Sarona Ventures. And that makes, that definitely ups the game. I love that.
And I hope that people will join our mission here and really, understand what we're here to do. And we're not here just for, a year or two. Right. We're here for the long game, and we're here to make sure Israel continues to be the, shining light in the world and the phenomenal source of technology and innovation that it is. And it's only on us. I mean, us, and us,
100%. Yeah. And if there's anything that became clear after October 11 is that us is one. We are one. There's no escaping it.
We are one.
We are 100% one. I can't let you go without asking a question that I will apologize because you were not forewarned, but being that this is a financial podcast, I'm always curious. Is there any fintech coming out of Israel now that you're seeing that's exciting? Anything in the pipeline in terms of the financial technology that you're like, oh, that's something to keep an eye for?
Wow, there are many.
Really? Tell us a little bit.
So we have invested recently in a very exciting fintech company. In general, I think that what I find exciting at the moment on the fintech world, is the intersection between fintech and other industries.
Nice.
That's what I'm personally, when I look at fintech, I think this is very interesting because yes, you can say AI, and AI is obvious because AI is everywhere. Right. Yes, you can say blockchain because blockchain is obvious, and if you have good applications of blockchain, which is not easy to do, then that's interesting. But in terms of applications and use cases, what I find interesting in fintech is actually the non-obvious fintechs. So, for example, we have a company that is doing mortgage lending. So they know how to forecast the value, the future value of your property post renovation. And then they allow you, with partnership with the banks, to provide you a higher loan to actually make a nicer refurbishing to make your house nicer and more valuable.
Wow.
So that's a fintech, right? I mean, their
Yes.
business model is fintech, but it's not the classic fintech that you would say, okay, that's technology for banks or
Right. Another transaction, to build another transaction. Right. Love that. I love that. Toot Shani, thank you so much. Continued success with Sarona Ventures and with Tech Shield. And yeah, it should be able to be exactly what you want it to be. It should fulfill the mission. And we're very, very proud. I'm very happy that you're doing this.
Thank you so much, Yael, for having me, and really pleasure to get to know you and everyone who's going to be watching.
My pleasure.